Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com for Friday, December 14th, 2007. Well, the end of the week was a little different than I would say most of the week, especially Wednesday, Thursday, and Thursday, and I'll explain why. Number one, the last 2 days we had kept on talking about how they kept on saving this market time and time again. And every time the market dipped during the day, by the end of the day, we saw a rally back to the positive territory, or at least the flat line. And every day we were either gapping down, or they were selling us hard midday, or something was going on in this regard, especially Wednesday and Thursday. Now, the interesting thing is, this morning in the chat room as we were talking, and the market was gapping down on the CPI numbers, which again showed inflation, even in the core number. There was a little more inflation than was hoped for. I happened to mention that I said, hey, listen, if they keep on gapping this market down, one time the market's just going to give up and collapse, and not collapse as in crash. That's the farthest from what I mean. But in general, it's kind of like if you keep on starting at the bottom of the mountain, and every time you climb up the mountain, the next day you wake up and you're at the bottom of the mountain again. There is going to be one day where you're going to say, hey, I'm not going up the mountain, I'm going back down, and I'm going to go back the rest of the way. And in many ways, that seemed what happened in the markets today. So interestingly enough, and I'm going to flip to the NASDAQ chart right off the bat here, this is the intraday chart, and what we saw in the markets today was a sell-off late in the day. And the sell-off was, we were down early, we rallied back a little bit in the markets, almost positive, or on most indexes, at least flat. And then later in the day, we started to sell off, and the selling just continued and continued. Now, this intraday NASDAQ chart isn't the greatest of charts, so I'm going to flip up the ES chart, and I actually want to change it. For those of you interested that pay attention to the ES, we just switched over to the new contract. Instead of ESZ7, it's now ESH8, and that's the March contract for '08. Okay, folks? So this is the chart here, and I'm going to flip to the tools and get over my trend tool here so we can actually annotate the chart a little bit and go over some different things. But what you can see here is that early on in the day we had some interesting stuff going on here, and again, this is the 10-minute chart, and here early in the morning no volume really, but then at 8:30 we had the CPI number. Okay, and that CPI number, especially the core, we expected some inflation overall in the CPI, but it's the core that usually they want to see that has no inflation. You exclude in the core food and energy. Obviously, with gas prices moving up, oil's moved up over the last couple of months, so you're going to have a little move up in the regular number, but the core number excludes food and energy. And here's the volume spike on that CPI number, and again, the core showed more inflation. You saw this drop in the futures. This is a pretty big drop. You're talking about almost a 10-point drop in the futures off the bat here at 8:30. And then over the next half an hour to hour, we slowly started to form a base and move back up. Now here around 10:30 we topped out. The markets actually went flat on the day, and then after that it was just downhill. We sold back to the lows, and just interestingly enough, look at this. Nice little double bottom here, and that got us a bounce. Again, we got a normal bounce, but look at the moving averages we hit here. The yellow line is the 20 moving average, the pink line here is the 50 moving average, so you're coming into what's called a necktie, which is two moving averages together. Now those create a major resistance level. One moving average is usually a resistance if the chart is moving up into that. If it's moving down into it, then it's a support. But two moving averages create what's called a necktie when they combine and cross. And if you hit that point, and it looks like we hit that point right here, that becomes some major resistance because it's like two support or two resistance areas together in one. And again, the markets could not get above that. At that point, we sold off here, and we just kept on selling the whole rest of the day. The market dropping basically from 1:30 on straight through. NASDAQ ended down a surprising 33 points, or 1.2%, and the Dow ended down 178 points, or 1.3%, while the S&P ended down 20.5 points, or 1.37%. Volume was nice on the day. There's no doubt about it. Volume was very nice. Almost 2 million shares traded, or about 2 million shares traded. And again, very nice volume. And what we can see here is that you had a drop in the, just to go over the stochastics quickly, you can see that there's no real negative divergence or positive divergence here. It's just a continual decline. And the reason why that is because if you look at the high here and the high here, you have a drop, right? And I went over stochastics yesterday, so I just want to show you a normal stochastic move here. And then down here, you have this point here, which coincides with the top right here, and this point here, which coincides. So they're both moving down. So that's just a normal stochastics. Doesn't tell you anything significant there. And again, here you have another top here that's even lower. But again, the chart was moving down too. Negative and positive stochastics have to go opposite each other, kind of like this. All right. So if the chart is moving down and the stochastics have made higher highs, then you're seeing then some negative or positive divergences. And we'll go over that more. The more I see that in charts intraday, we'll go over that. All right, folks. So overall, again, we saw a pretty strong sell-off, and the sell-off actually had a couple interesting facets in it. Originally, when we were up, Baidu was up, and Baidu did end up on the day. And again, you guys know I'm watching these large cap tech for really indications of major selling. Of the large four that I follow, which are Google, Baidu, Apple, and Research in Motion, two of them were up. Baidu was up, which is a Chinese portal, and Research in Motion was up. Now, Research in Motion we've mentioned quite a bit lately because they keep saving it from closing below 100. And again, it did not close below 100 today, and here's the chart on Research in Motion. And yesterday we had that major rally, continuation of the rally here, a great shorting opportunity, which we actually called in the room, and I think a couple individuals were short there, all the way back down to this 20 moving average, at which point it kind of just went sideways, sold off at the end of the day. Now, Research in Motion still closed up $1.68, well above that 100 mark at close to 106. Now, Baidu was the other player that was up quite nicely today, and that was pretty much just in a trend all day sideways, as you can see right here. Closing up 6 points to 393 almost on the button across the board here. Now, Google was down right here. Google down, and here's the daily chart on Google. Now, you've seen we had a nice move up, a pullback to the 20 on the daily, and then a nice move up, but really now we're back to the 20. So the question here is, are we going to break the 20 and move lower or not? Now, again, that's just going over the main ones we watch, and we follow those overall on the Qs. If you follow the Qs, you're going to pretty much follow the top 100 NASDAQ stocks here, and it's going to give you a general sense. Now, look at where we are. We're sitting right on this 20 moving average on the Qs. Should that close below, let's say down here, and we get a confirmation move the day after, it's very possible we fill this gap here, number one. All right, the gap fill is number one. Should we break this point right here? And then after that, we could very well go to the lows. Now, if we break below those lows, we're definitely going to test this 200 moving average. So that's key as well. Now, let's look at the NASDAQ chart on the daily, because the NASDAQ on the daily is very interesting. Again, we're right on top of this 20 moving average. In fact, we closed a tiny bit below that 20 moving average. Now, should we close below that 20 and confirm it on Monday, so let's say we get a confirmation move lower on Monday, well, then we're talking about possibly a move to this gap point right here. All right, and that would be the next spot that I would expect the NASDAQ to go if we confirm the move on Monday. Now, we did talk about a possibility of a move up, and I still think that's a very solid chance, and I'll show you a couple things why. All right, number one, you have some major support areas. Number one is right here on the 20. If we don't confirm it, this maintains support on Monday. Even if we break down, the next support area is right here. And the next support area is right like a tick below that here on the NASDAQ at the 200, which is, and then possibly the gap fill right here, worst case. So there's a lot of support here on the market. Should we take all this out? And then eventually, which I do believe, by the way, folks, and I really want to be clear, even though I could see us bouncing up here next week or going into Options X, and that's key. Remember Options X. Every Options X week, we warn everyone about it and understand that whichever way more people are headed in the market, if there's more puts, if there's more calls, meaning there's more shorts or more longs, the market usually goes the opposite way. Okay, so be truly aware of that. All right, so again, that's one issue, and I think there might be a lot of bears out there starting to come out again, so it wouldn't shock me to see a little support areas, maybe this hit and bounce up, or maybe even us holding the 20 moving average here. Now, again, on the upside, we pointed this out yesterday. You got the 50 moving average right there, and that's this upside support. Now, again, you have Options X next week. You have the holiday coming up. Volume's going to get lighter, and that favors the upside too. So we'll see. We'll see, folks. But it's not going to be a very Merry Christmas for a lot of people if we dump out and break these lows down here. So, again, it could be very interesting to watch. Now, let's look at the ES Daily. The ES Daily is on support right now too. So, again, this is kind of why I could see us possibly having a, maybe a sell-off down a little lower, but overall we could bounce or stay flat here into the holidays. Again, it's bonus time too, so again, it's very unlikely that, well, I shouldn't say unlikely, but the odds slightly favor a sideways market here. Everyone gets their bonus on Wall Street and everyone's happy, and then they let the market fall in January, which I do believe will happen, folks. I'm not going to BS you guys here. Even though we might have a small bounce up here and there, I do believe that in January we will see these lows down here on the ES futures, if not lower. And I do happen to think we are going to go lower at some point. We've had a nice retracement here. I dare say it's probably in the realm of 0.618, which is a Fibonacci retracement number. I didn't do the calculations myself, but it's probably around that, and you could possibly see another possible move down based off of a few technical indicators after we get a small bounce into the holidays. All right, let's look quickly at the SPY. And then I want to show you one more thing. Again, the SPY sitting right on this 20 moving average. After this move up, usually you get a bounce on the first time you hit the 20 moving average. All right, you get a small bounce up, and then the second time or the third time it comes down, it breaks that moving average, and we'll see if that happens. The last thing I want to show you is the QID, which is 2 times short the NASDAQ. It's coming into resistance right here on the 20 moving average. So again, should we clear these 20 moving averages in all these charts, then it's clear sailing down in the markets. But I just want to keep everyone appraised of this. Options X, bonuses, a light volume holiday, and resistance at the 20. Have a wonderful weekend, guys. We'll talk to you soon.